Laramide Resources. We're a Toronto-based company involved in the uranium sector. We're a late-stage developer with projects in the United States and Australia, and we're part of this uranium thematic, which is very strong of late as people get focused on the energy future and the energy transition.
Well, they certainly are. And I guess you kind of played the waiting game, Marc, right? You said, right, as soon as price starts moving, everyone starts getting interesting again. So I'm interested today to understand what you now have to do. We've seen the PEA last month. Tell me about the plan going forward.
Sure. Well, as we've spoken in the past about the sort of this price that we needed, everyone thought this so-called incentive price was around $65. I think when I saw you last, it was WNA in London.
That's right.
Things were stirring quite a bit then. That was quite an exciting conference. The utilities, as much as you can see them being nervous, if that's such a thing, they were definitely a little bit nervous at that point that the price was going to move on them. And it certainly has since that period of time, which was September, we basically went straight up through $100. And, we're now in an environment where price is not an impediment really to anybody that has a real project going forward. So, and we're in that group there that really we require permits. And obviously, ultimately, you'll have to capitalize the projects and build them. But we're sort of in the next wave of developers. There's a handful of companies that have charged ahead a bit to be early into production. And I think those projects are kind of the latter half of this year deliverable, and we'll see how those go. And there's another whole suite of developers that has projects, and we would be in that group, primarily leading with this one in the United States, which is an ISR project. For those that are not familiar with, that's in situ recovery. It's basically solution mining. And we have a very nice, very substantial project that we've just delivered an economic study on. It's based in northwestern New Mexico.
Right. Okay. So you've got, okay, let's start with the US first. Okay. We'll leave Australia for now. Let's focus on the US, right? We've had a few CEOs, uranium CEOs kind of come through the doors recently, and they agree with you. It's hitting up this price, affirmative price movement, which is great news. But what I was interested with then was, what are they doing to insert themselves into the right group in terms of the way that institutions view them, where that retail investors view them? So it's going to come down to what they're doing, and whether they can actually get into production. So in terms of the US ecosystem that you're in, all very, very positive. How do you move each project forward? Okay, we've seen you've kind of also got ISR, you've got hard rock as well. So what's the priority for you? What's the allocation of capital look like for you? What's the best use of allocation of capital?
Well, let's talk more about timing, because really we'll talk about these hard rock projects, which the smallest of those may timing wise make it to the head of the pack just because of the nature of it. And, it needs a mill, and the mill is turning on. That's another situation where we needed price for the only hard rock mill in the United States really to resume production. And really, if you step back to the 10,000 foot level and look at the United States writ large as part of a solution to the uranium supply demand shortfall, it's going to be a modest contributor. I mean, I think if you went flat out at unlimited capital and they gave you the permits tomorrow morning, the max production capacity in the United States, you'd be hard pressed to see it beyond, say, 15 million pounds. It basically, when it was all hard rock in the last cycle in the 70s, when they were trying to match up supply to all these nuke plants they built, because they built 100 of them in a decade, we never got beyond, I think 19 million pounds was peak year production. And that was pre-ISR technology, which really was probably popularized by Cameco in Wyoming. And now the preference probably for these projects is these ISR projects, just because they're easier to permit. They're environmentally smaller footprints. You're not leaving a tailings dam and everything. And so there's a whole host of those, and I want to say there's 5 or 6 of those. We have one of those, a very good one, a large one. And because we didn't have one that had previously been operated, we're obviously going to be slower than the ones that were basically, they built the plant, they got to wait for the price to turn back on. And you have a couple of those that have started now. And you've still got Cameco stuff on care and maintenance in Wyoming, which is not insubstantial, but they've probably mined through the best bit of it, if you will. And we have one where you're going to have to go, first of all, we have all the federal permits is required, because this is what's called an agreement state. You have to go to the feds for part of your permitting. So we have an NRC license, which is in what's called timely renewal, which means it just is freshened up before you start mining. But we have to re-permit the New Mexico piece of it because the rules changed in 2015 during the bear market. And that's the permit that will be the last permit that we require, at which point we'll be shovel ready. We've initiated that process now. And when that's concluded, which we hope is a timeline like 12 to 18 months, we'll effectively be shovel ready. And at that point, we would build what we effectively said in the PEA, which is you'll build the initial well field and a process recovery plant, and you'll build resin recovery plants at site and truck the resin to the final recovery site. And that's what most of these ISRs look like. The beautiful thing about an ISR thing is it's relatively quick to build because of the nature of what you're building, vis-a-vis something like, let's say, Athabasca, where you've got to sink shafts quite deep and it takes a long time. And you've also got to build a process plant there. And the entire CapEx is like $50 million US. So it's a very good starter thing for a development stage company and for the shareholders, because it's not one of these things where, as you're seeing in many parts of the mining business, it could be an existential experience to build one of these projects. You may have a great thing, but if it costs $1 billion, it's a bit of a, white knuckle experience getting to the finish line for the management probably, and certainly for the shareholders. So we're fortunate not to have that.
No, I hear what you're saying, but here's the thing: if I look at the PEA, okay, the numbers sound good, right? You're producing over 31 years, so 31 million pounds over 31 years, £1 million a year, 62% IRR. But let's say even if it's a bumpy ride together, and it's a little bit less than that, it's still exceptional returns. But it's of a certain size, right? And so, and as you say, it's hard for US companies to kind of come together, maybe get to the point where we can produce 15 million pounds collectively. But why should investors kind of get into these kind of small American plays? Because it just feels like, and like I'm not being disparaging it. It's an almost NPV of nearly 300 million. It's fine. But if I look at some of the valuations being created elsewhere in Canada from people who perhaps aren't even going to get in production in the next 10 years. It kind of pales a bit. So is the plan get this thing up and running, because it's, I say modest CapEx, less than $50 million, show that you can do it, and then maybe look to, buy up more of these opportunities? Because you kind of need scale for something like this, don't you, to be noticed?
Well, yeah, let me answer that in a couple of ways. First of all, as respect to the project itself, we did a very simplified model which straight lined the resource over a mine life with even amount of production every year. In reality, what's going to happen, and to the extent that you have the ability to do that, everybody scales up as soon as they can. You sort of £1 million is kind of the threshold you need. It's kind of a rule of thumb in these things. You kind of need that to have a decent return at these kind of numbers, $65, $75. Obviously, the numbers look a lot better when you're mining 2 million pounds a year, et cetera. And that's really what you're going to try and achieve as soon as possible. You're going to double up the capacity, and et cetera. Now, with the NRC license that we actually have the capacity to produce 3 million pounds from that site. So we already have all the capacity technically that we need. Now it's a question of getting the production up and running. Now, in terms of what the bigger picture, our vision of the way the whole company would go is that, I've said this many times before, and is that we wanted to effectively be, the second banana to Cameco or something like that, very much like Paladin was in the last cycle, where they basically were trying to create a diversified company that was very attractive to the utilities because they wanted a diversified source of production from mines and what have you. And they wanted scale, because if they wanted to do contracts, they didn't care if they got it from mine number 1 or mine number 2 or whatever. They just wanted a contract for a certain amount of production and know that they would get it. And your whole raison d'etre is to be a supplier to the nuclear utility industry. And so to the extent you get scale, you've got to get it other ways. Now, we have a much bigger project in Australia that when you put it together with our American stuff, maybe an acquisition or two, you can easily see how you can get to 8 or 10 million pounds. Your point is very well taken, though, Matt, in terms of these American ones. Most of the ISRs, in reality, they're 1 million to 2 million pounds a year. That's it. For those companies to get bigger, they're going to have to probably do some kind of an M&A thing, or realistically go find another one. Now, most of the American West has been extraordinarily well drilled in the 1970s. Most of the things that would lend themselves to being ISR producers are known. So you're really now looking to probably other jurisdictions. And as I said before, I don't think if you ask most of the American companies what's the peak production in America that you can achieve, no, I mean, I don't think they're going to say it's 30 or 40 million pounds a year. Now, to the other point, though, about on the other end of the spectrum, I would take with a grain of salt the ridiculous NPVs that come out when people say, I'm going to start my mine at 20 or 30 million pounds a year, because there is a market that you have to feed yourself into. And even in a tight supply scenario like we have right now, you've got to have utility support, I don't know, for at least half of it, I would think, coming out of the ground. You're not just going to be able to start taking 20 million pounds out of the ground without a home. So there's probably a balance there. So some of these bigger things that are going to happen in the basin, that remains to be seen. That's the biggest unanswered question to me in the whole uranium business, is how does Canada scale up from where it is right now, which is 20 million pounds. First they have to make sure they continue producing the 20 million pounds or whatever it is that they're producing, or 30 or whatever it is, because the French are in there as well, these two big deposits. And then you've got to maybe incrementally get some more, but there's a finite market for that. Because there's a finite amount of really Western contracts, if you will. I mean, I don't believe they're going to bring Saskatchewan on to satisfy Russian nuclear demand.
I think that would be pretty brave if they did. But,
I think they figured out that there's a country a lot closer to them that they could get supply from. And that's one of the things that really is a feature of our market now. There's this bifurcation, East versus West, is a big thing that was not in the last big uranium cycle, which is important. Yeah.
For sure. Maybe we can talk about that at the end. But I guess also now I'm just thinking in the minds of the utilities, having seen flooding cause issues in Canada, Cigar Lake, Rabbit Lake, obviously, have had their own problems, not least of all COVID, so like reliant on one big supplier perhaps isn't at the top of their agenda either. And having some, I guess de-risking by having multi-location, multi-jurisdictional supply is, I guess, somewhat more comforting for utilities in terms of their risk management. But like I say, again, that's further down the line. If I just sticking with you, so what I'm hearing from you is that there's potential, because you mentioned the phrase, not just in terms of how you build out maybe slightly quicker than the PA is suggesting with Church Rock, but how M&A might be, because Australia, again, we will come to Australia because, like I say, it's a kind of fairly binary outcome potentially there with the elections, and I want to get your view on that in a second. But M&A, that's all I'm hearing from lots of uranium CEOs at the moment who perhaps have been around the block a bit longer. I kind of feel from them, I'm more willing to accept that they are serious about that rather than just some throwaway comment and go, oh, M&A is never off the table. So do you think for you, do you think you've got some proof points to deliver, i.e. you've got to get project number one funded and maybe start the build process before you can do that? Or do you think the market is just going to allow you to raise the money you need to be able to maybe roll up some of these North American smaller plays?
I don't know. It's a good question. Is you're asking if we were doing the M&A or we have versus inbound M&A. Certainly from an inbound M&A standpoint, no, people were getting inquiries all the time about would you do this? Would you do that? It turns out most of the people don't have this vision about creating this big company that's a big supplier to the utilities. They're much more interested in creating some kind of geographic center, no matter how big it is, because that suits their ability to manage the assets and what have you. Because it is a bit of a challenge when you have things in different continents that are many time zones apart. But the deposits are where they are, and also it's a very small suite of, the space. It's a very small suite of companies, and within that suite of companies that have plausible assets that can produce uranium, the few that have charged ahead, and really there's only 3 of them now that are going to deliver, I think, into the latter half of this year, and they're all restarts. So that's why the things are slow. We're into just the restarts. These are things that already had substantial infrastructure attached to them, et cetera, operated before. We're then going to get into things like ours that obviously need to be constructed for the first time. And then you're into the more substantial things that are the $1 billion plus CapEx things. And even then we're probably short. So that you can see it's a bit of a dilemma because of that. And because of that whole bifurcation thing that has developed, I mean, you put yourself in a position if you're a Western user, substantial user of uranium, say a company like Orano, for example. I mean, I wouldn't want to be the management of that company if you look what's happened to their visibility on production in the last 3 or 4 years. You know, I think they're owed pounds out of Saskatchewan because Saskatchewan hasn't gone quite as well. Next thing you know, there's a coup in Niger. Next thing you know, this is like ripped from the headline stuff. This is last week. Yeah, we're going to do a deal in Mongolia, which I know something about, you know. And lo and behold, oh, surprise, surprise, the Mongolians, you know, didn't sign on the dotted line. And my guess, the Russians are interfering in there would be my guess if I had to hazard a guess on it. And suddenly that source of supply, which is this deposit they found a long time ago, is, well, who knows? So those kind of companies got to think, where are we going to get supply? I mean, they sort of have, that's why they have to have their fingers in many different possibilities and permutations of possible future production just to get the supply they need to keep the lights on in France. So it's a complicated thing. And frankly, we're all probably going too slow, but governments are part of the problem. Like governments, as much as they say they want to get behind certain things, you know, it's only a few countries where they say we're really getting behind this thing. And then, you know, a couple of years later, you have an industry that most of Western countries, it really doesn't go that quickly for a variety of reasons.
Yeah, I kind of think governments are looking downstream rather than upstream in terms of funding or making capital available, and even that's not necessarily a whole bunch of cash; it's a whole bunch of incentives, which is a slightly different play in that the company is reliant on their ability to persuade others that incentive will play out and over a long period of time. But again, it's stuff for another day here. But like, I want to focus on you because it's really, really important that I understand what I'm investing into. It sounds like potentially you're saying, well, we could set ourselves up to be a takeover target. That might be a slightly easier play in all of this because it's hard work kind of rolling up assets. It's time consuming. It's also potentially maybe not the best thing to do with our money. Am I reading you right, or are you keeping all options on the table?
No, I wouldn't say that so much. Is that we are on this continuum. The assets that we have, which we've held on to because we understood that we thought maybe one day uranium will come back, and we own very good tier 1 type assets. You know, when you're in the lowest cost quartile with things of, you know, relatively substantial size, you're typically not just going to go, maybe we should just give this up and go into blockchain or something, you know. So we held on. I mean, we think we've had this conversation before. Nobody in the business thought we're signing up for a 10-year bear market. Let's get some supplies in because it's going to be a while. Every was 6 months followed by another 6 months followed. You know, that's how all these things roll. And, you know, 10 years goes by. But that's created the conditions we have today where you got this massive shortfall. So it's the good part is the next few years are going to be quite good because you got to make up for all these years that were really nothing much got accomplished. So our assets are in this continuum of moving along, and they will be in production in the kind of an ordinary sequence. Sometimes it's frustrating for shareholders because you can't like put a date on it because, well, there's a permit that someone has to give us. Listen, we have things today that if we had permits in our hand, we would go out tomorrow and break ground. Probably you wouldn't do both simultaneously as a junior because it would be irresponsible. But you would go and you would build the first smaller one, get cash flow, and then immediately be breaking ground on the second one. And within a few years, Laramide would have 6, 7, 8 million pounds of production.
But how do you do that? Just given the stage of that. I mean, is there enough of all the studies that you need to be done? Have they been done? What do you understand about the economics and how you get after this? I get that it's like low capex stuff, great, but that doesn't actually guarantee margin, which is what it's about, making money. So why can you get after it so quickly? Well,
first of all, we've done a lot of work has been done on these assets. On the American asset, you know, and this is similar for all these ISRs. They mostly weren't drilled out by the current people running these companies. They were drilled out by typically big oil back in the day. Ours was drilled out by big nuclear. It was United Nuclear, which is a division of General Electric. And the reason they were out looking for deposits was because when they sold the nuclear power plant, they had to be able to sell people, you know, the equivalent of the light bulbs that kept the thing running. So everybody got into and the French were in it. Everybody was in it. That's what, if you remember Atomic Ann in the last cycle, that's how the French ended up buying that thing in Namibia, which was sort of an ore body, but turned out not to be, because they had to convince people when they sold them a power plant that they could sell them the first 5 years of supply to put into the power plant. And so those legacy assets from even back that cycle are still around, but those are rapidly diminishing. Those are the ones now that are first off the rank, and that to be followed. The last probably are the ones that were found in Saskatchewan during the bear market. That's the west side of the basin. And after that, the cupboard's pretty bare when you start looking at it, really. Obviously, there was other stuff found on the east side of the basin, but those things are not as substantial. And in the case of Australia, it was a Rio Tinto project. And so on top of that, we probably spent 40 or 50 million on it, doing more work, confirming their drilling, 2 separate economic studies. It was the lowest quartile thing. Its relative place in the ranking of deposits won't have changed in the last 10 years relative to, because we haven't found a whole suite of other things. It's not like, say, a lithium where, first of all, no one knew anything. It's like all these things when they first happened, no one knows anything about it. So no one knows anything about lithium. Then they don't really know if this one's better than that one. And then you have a new technology comes in like DLE. And so everybody just doesn't understand how the economics run. In uranium, it's very simple that we are working with a very small number of things that have been around for a long time, and they will happen in probably a very logical order.
Okay, well, let's get on to your project, Westmoreland in Australia. You did a bit of drilling last year. You got a bunch more drilling that you're planning this year. So tell us where that project's at, and can you talk about it in the context of Australian politics? Australia is not pro-nuclear, right? That's fair to say. The election coming up later this year, is anything going to change?
I don't think it's pro-nuclear or anti-nuclear. It's a policy of one of the two parties that they have for a long time not been. They're certainly not wildly bullish about nuclear and happy to promote nuclear. They're over their antagonism towards producing uranium at the federal level. That's all gone away. There's a couple of states where the state labor parties really basically to appease a green voting bloc that they need to have in their camp in order to win elections, win majorities. However, the green vote is now changing. The green vote now in the most recent poll is in favor of SMRs. So the policy ideological, and this is exactly what happened in Sweden recently, where they're actually going to go through and they have to change the legislation. Eventually, basically everyone, if they want to have cheap electricity and they care about the environment, nuclear is going to make a big comeback. And nuclear is having a moment. And I think this moment's going to continue for quite some time now because it's got a huge tailwind from a variety of factors. And eventually it'll catch up to Australia. They're very sleepy and it seems like they're out of touch because they're so far away. But they will get with the program eventually, I believe. Irrespective of that, there's a state election coming up. And if that party gets voted out, then we're good to go anyway. So as we were in 2012, we had a moment before during the long bear market where we had the politics where we needed it, but the price was $25 a pound and nothing was going to get built. So there is no legislation that has to change or anything else. I think when people think about Australia is not in favor of nuclear, there's a debate about nuclear energy in Australia. And there is legislation nationally in Australia that says can't build nuclear power plants. So if a new government of a different stripe got in, they would have to jump through some hoops to make it so that they could build nuclear reactors. But that's some ways off. They have drunk the Green New Deal Kool-Aid in a massive way there, like probably akin to what Germany did, really. They had very, very cheap power, and now they have very, very expensive power because basically big renewables has come in and has the ear of the government. And that it's a debate actually going on in the Australian media literally as we speak. It's going to be a featured issue in the next federal election in Australia, which is in 2025. And the other party is basically saying we want to bring in the possibility of SMRs in Australia.
Right, and bringing in reactors, or whether they be small modular reactors or fully grown ones, is one thing, but mining uranium might be another. So do you think that sort of change in sentiment will allow new miners to actually, start trying to extract uranium from the ground?
Well, it's the whole issue because it's silly, sort of a silly anachronistic issue that dates back to this one party. So it's very confusing to follow it without a program. But what will happen if in the states, when the state government changes, there is no legislation. There's nothing to change. It's just the view of one person that says, when I'm in power, don't send me a mining application to mine your uranium mine because I'm not giving you a permit. Now, when the new government comes in, the next minute, it's like, can you bring me the permit by Friday? And if we had the permit ready by Friday, we'd be good to go. And that is that's exactly what happened in Western Australia, by the way. They had the same thing there were 4 deposits there these are deposits, a couple of these are quite substantial, owned by Cameco. They all got permitted in the window of time when the other party was out of power.
Was that the three mine policy?
No, that's
7 days.
That's a whole nother thing. The 3 mines policy has gone away. There is no 3 mines policy anymore. So in Australia, you needed 2 sets of permits to have a uranium mine. You needed all your environmental operating type permits. They were at the state level, like they would be at the province in Canada or at the state level in the United States. And then you had a federal permit that allowed you to export the uranium from Australia to another country. And they would only allow you to export it to countries that had signed the non-proliferation treaty. And even that one party, the Labor Party, said, we don't even want you to do that. You got away with, you slipped 3 mines by us, including Olympic Dam, which they pretended was a copper mine in order to kind of get it through the gauntlet. And so they had these 3 mines and they stopped it at that. And then eventually that went away. That went away in 2007. Though it's been gone for 15, 16 years now. And nobody talks about it anymore. That's done. All of the chatter is all about, should Australia have nuclear power? Because, of course, they are one of the biggest coal producers in the world. And yet they have this policy now where it's terrible to burn coal in Australia, but they make all their money shipping coal to other countries. So
not in my backyard, it's called, Mark.
Sometimes just the politics, you get dealt these hands in politics. You figure sooner or later sanity will prevail. I'm a big believer in that, sanity will prevail. And I think that's upon us relatively soon because of, first of all, there's an election that's probably going to go our way anyway. But if not, the population and the younger population, and this must be what will terrify Labor in the polls. They just took a poll, and for the first time, the younger people are pro-nuclear. And so I'm feeling a lot more optimistic about where this is headed over the next couple of years. Sweden being a template for how this all probably rolls.
Yeah, for sure. I've just come back from. So therefore, you're saying we are maybe going to take a bit of a head start here, and we believe is going to be positive. So therefore, we are going to allocate a budget for Westmoreland for drilling. To what end? What are you drilling to find out? What do you need to know? What are you going to be able to do as a result?
Yeah, that's a great question. So we do get asked that too, is why don't you just wait, et cetera. So we have a very nice situation, 50 plus million pounds. It would be a top 10 global uranium mine, lowest quartile, et cetera, et cetera. If we can make it 65 or 70 million pounds, which we think we have the ability to put some, quote unquote, easy runs on the board. Just because when we got it, we spent all our time validating what had been done previously and doing economic studies to show that it worked rather than trying to make it bigger. There was a lot of exploration potential. We've expanded the land position massively because we wanted to own the whole district. And we started a couple of years ago very small. And then last year in a bigger way, we drilled about 4,000 meters. We drilled 40 some holes, drilled a bunch of these targets. We got pretty interesting results all over the place. We're going to come back this year with a much bigger program, probably at least a couple of rigs, with the goal of getting, say, 65, 70 million pounds. If we could extend that mine life and suddenly you've got a 5 or 6 million pound a year deposit, that becomes of much more interest to the utilities, becomes of much more interest even to the governments, because they start looking, if you can go to the government and tell them a story, well, we want to build this uranium mine and it's quite big and it's meaningful, that's better than if it's small. And so, the economics might get enhanced a little bit, but by and large, you're probably going to be talking about more extending mine life than throughput. for scale, but you probably got some scale implications as well. And so we just think it's a very useful thing to do, and it's not expensive. And then the other thing we want to do to be ready is we want to have a kind of 90-day action plan ready to go on the back of the outcome of the election, because we want to be able to tell people, listen, we knew this a binary event was coming, and we're prepared.
Okay. So, but it's a slightly different project in the sense that it's, just over $300 million mark capex. On that, the IRR is about half of what you were saying at Church Rock, etc. Because it's a much bigger project. Do you feel that in terms of that kind of paperwork process that you're going to have to run through in NRs, you don't quite yet know what hoops you're going to have to jump through, so you can't be entirely prepared for that. But again, the question you're going to get asked all the time since you get into the study phase, which is, how quickly do you think you could get this up and running? Because governments come in and governments leave, so you've got to move quite quickly.
Well, our working assumption is that if the government changes and you get the liberals in there, that they will follow the template that they produced back when they were last in power in 2012 to 2015. And they went around specifically and not only did like a listening tour and everything else about permitting and what they wanted to see, but they produced their own 200-page booklet and said, look, we're going to be super sensitive about the whole permitting side of this thing. And, they always obviously have some uranium mines in Australia, so they know how to do it. They have expertise nationally. But that exists. So basically, they've got a book on the shelf they can pull and say, listen, we're good. This is how we're going to permit a uranium mine versus a regular mine. So they really don't have to do anything other than just default to what they've done already. And we're assuming that that's what's going to happen. As I said, no legislation has to change or anything else. We just have to be ready to go. We started down the track in that last window of time when it was available to us to do the baseline work and all this kind of stuff. But, any kind of permitting exercise is a couple of year exercise for a project of this scale. This is, as you said, it's a much bigger CapEx thing. It's a, reasonable it's a typical open pit kind of thing with a plant and what have you. And this is a project of sufficient scale that the prudent way to finance it would be underpinned by utility contracts.
Right.
To some degree.
And right. So, it was fairly standard stuff, right? But so no surprises there. But if I look at the value of your company and try and understand where that value is being attributed, right? You're sitting as a $220 million market cap company today, share price up around 90 cents, and you've been going through the phases, since halfway through last year. But that's a reaction to market price, market sentiment. How do I look at your portfolio and say, well, that's where the value lies? Because you're listed on the TSX, you're listed on the ASX, and you're also an OTC company. How's trading? Where do you think value lies?
Well, part of the reason we were excited to get some economic numbers on the U.S. out was to underpin the value of the whole company and say, listen, if you want to put measuring the weight of value on something, use some kind of NPV NAV value on something that pretty clearly has a path forward and a reasonable defined timeline. And then this other thing over there, with it has this political thing that needs to happen. That's more of your probability weighted, prediction market weighted thing. And I think we're getting, and really the bigger asset, as you've alluded to right at the beginning, when you insulted our little £1 million a year ISR project, is the big trophy asset is that asset, because not only is it big already, it can get bigger, and then we own the whole district, and is that $1 billion asset in a market where suddenly we can build it, and the French will shut out of everywhere, and you can easily see a scenario where it's pretty easy to make that happen pretty quickly. I mean, if that government goes from being, and I wouldn't say they're hostile, but just our conversation that we just has, no one understands Australia. It's all just too hard. Like, call me when it's easy. It just goes to being easy. Then we're going to get a lot more value for that. And I don't know, when we're not really getting any of that pickup yet. I mean, because I don't know, everybody's a day trader now. Maybe we've got to get closer to the day of the outcome, But I think before the election comes, we're going to start to see more interest in people betting on the outcome there, because it's not a crazy outcome that it can happen. I mean, we're not betting the 200 to 1 shot in the horse race here. This is like the party that we want to win is leading. So, and the other group have been in for 9 or 10 years, and in a democracy, that's okay. You had your chance. That's just what we do in democracies. You get your 10 years and you're out. So we're feeling pretty good about the outcome of the election.
Okay. Well, like I say, I think that's perhaps why there's not as much value being attributed there, because people want to kind of move closer to that point, and possibly even after the election to kind of attribute you with more value. But it's a big project, starting off as a £2 million project. So it's got some scale to it out of the gate, and maybe you can make that bigger as well. All in your control, which is great. So I think that's going to help me get a sense of how this company moves through the phases, and because you made a big statement at the beginning, which is like you're kind of like part of the front runners, as it were, advanced development you called yourselves. So I just want to sort of understand, are you one of the ones that can get into production, will get into production, or just talking a good game, and how those assets in the portfolio are being developed. You've not sat on your hands of late.
No, I mean,
looks like 2024 looks
these
busy
are not,
too.
These are not, there was, I can't remember who the market analyst was. He called them trading sardines. These are not trading sardines. These are sardines that are being ready for production. And, the goal of the company, these are very good assets that frankly, they need to get built. I would say that whole group of us, and I used to call it the survivor group, the group that made it of assets that made it from the last cycle to this cycle. The reason they made it is because those are the assets that the nuclear utilities need to get developed, because we have a real problem. And now we have a super duper problem, because if Kazakhstan either A, sells everything they have to Russia and China, which was kind of always obvious that probably might go that way anyway, never mind all the other geopolitical things that have happened, or B, they don't have what they say they have, which is kind of a bigger problem, because that means the shortfall is even bigger, then we have a more urgency to get the remaining things out there that exist in the world online more quickly. And obviously we have a few of those, and that's those things. And I would say all of those assets really have all just moved forward. I think the ones that have moved, that people are talking about production, those are all restarts. They always could move quicker because they're restarts.
Yeah, no, I understand.
I'm not sure the market really understands that. People are, and rightly so, they get a lot of credit for doing it and for taking the gamble, because people that did the restarts, they started the restarts before we had price certainty beyond 65. Like, they just said, this is going to happen. We're doing it. Full credit to them for cranking on and doing it. And they're ready to go now in 24, latter half of 24. And everybody else kind of had to wait a little bit, because we had so many false dawns in the uranium price, including when we went to 65 once and then immediately back to 45. At 45, really, you couldn't do anything. I mean, that sort of explains why Cameco even is, Cameco wasn't racing to get back to capacity. So they're a little bit behind, partly because they're price dependent as well, in a way.
Well, yeah, and I don't think they were rushing to get back into Wyoming either, but obviously things have changed. So all good news. Well, Marc, look, appreciate your time today. I hope to catch you in Toronto next week as well. Maybe
that'd be great.
Sort of chat a little bit more. So appreciate that, and nice to see the market reacting. Nice to see investors kind of reacting to this. I think we're in a little reset at the moment, a little pause, which is fine. But the general trend seems to be up, and hopefully we'll continue that way in 2024. So best of luck with your projects, and speak soon.
Yeah, thanks, Matt, and great to chat today. And we'll see you at PDAC.